We are going to roll right into our next session. Dennis, I know you being really in this industry, What are you excited for most on Andrew Miller's high stakes deals?
Well, there's so much that goes into making those big deals happen, right? And without you being in that big deal, you may not find out all the details. And Andrew always does an excellent job going into detail of how he does it, being transparent as much as he can share. And he really goes into that great detail where we can learn from. So I'm really excited to hear those little tidbits of what he'll be sharing on how it really goes down.
Absolutely. And for that conversation, we have Ron Jackson and Andrew Miller. Welcome to the stage, gentlemen.
Thank you, Alan. I appreciate that. Thank you. Let's see. Let's get a bottle. This is going to be an interesting conversation. Let's keep the whistle wet. This will come in handy.
A mess.
We're going to have a good time here, and it's going to be a little bit different. Get the glasses out. I bring mine in advance, so I don't have to go through the embarrassing part of putting them on.
Off and on. I'll just be off and on.
That way people don't notice it at all. Having this opportunity to sit down with Andrew at this point in time worked out so well because he happens to be the topic of our current cover story at DN Journal, which if we sat here, it would take about maybe the whole day to recount what's in that story, because we start literally with your birth. We go through all your childhood, early years, where you develop a lot of philosophies that serve you well today, from things you learned from your family and early business career and early enterprises. So the thing to do on that would be, if you, after this session, of course, not while we're doing it, go to Google, put in DN Journal, Andrew Miller, and you actually will probably see two cover stories come up. One is the one that's on the front page right now, so that's easy to find. And the other, back in 2005, we did the first cover story I did on Andrew when I met him at what I think was the second traffic show ever.
Rick Schwartz.
Yeah. And it was really crazy because I almost couldn't really believe him at first. Let me get this list here so I don't forget some of these. But at this is early on. I mean, the very first domain conference ever was 2004. So here comes Andrew, who I hadn't met a year later. And he already had under his belt these sales, and this is just some, because most of yours, the price still to this day probably hasn't come out.
Probably.
So we have beer.com, $7 million. That's almost the value of the beer you've drank in your life. So it's pretty impressive. I like to put things in relative terms because 7 million is a big number, so it can be hard to grasp that stuff. Insurancequotes.com, $6.5 million. Diamond.com, $6 million. I mean, one guy, if any of us sold one of those things, we'd be done. We'd be happy for life and might not even pursue anymore. So, I mean, what's the point? But you just you just never learn. You just keep on going, doing the same thing over and over and over. That's supposed to be the definition of insanity.
If it ain't broken, don't fix it.
Yeah, I guess. But anyhow, I'm not even done yet. Shop.com and creditcards.com. Again, 2005, $3.5 million by the time I'd met you. You had telephone.com, $2 million. That wasn't enough for you because you got equity in the company too. That's the Rick Schwartz kind of a deal there. He always insisted on.
Didn't turn out as good as Rick's.
Is that right? Yeah, well, he had a really nice one there. But all this 20 years ago, so it's really an amazing thing. Now, we could talk a lot more about the mechanics of doing deals like that. But after I do a session right after Andrew with Jen Sale, he'll be back up here with my good friend Larry Fisher, who you've partnered on some amazing sales, Home.com being one that you and Larry had a session about up here last year. That was one of the best sessions of the entire Namescon show last year. And also Andrew Rosner is going to be sitting in with you. And I always thought it was like really competitive at the top here. You got you and Larry. You somehow made a friend out of Larry, but you got two Andy, same name even, and you're both killing it. So that's going to be interesting. We'll sit in there and see if we can. If I have to, I'll come up and keep the peace.
They're both the
They're
best.
all great. There's no question about it. So because they're going to do that part of it shortly, what I wanted to talk to Andrew about more is his philosophy of life, kind of, that he developed over the years. because he credits so much of this philosophy to the success that he's had in the domain business, both back then and today. And when I jumped to today, you thought those numbers from 2005 were impressive. You all have heard about the chat.com sale at Hilco Digital Assets that Andrew got done for $15.5 million. You heard about gold, just was revealed in the last few weeks. That's the biggest sale of the year to date, 8,515,000, if I recall correctly. That's like 7 times bigger than the next highest sale that's been reported so far this year. And of course, it was the home one last year. The price on that wasn't out, but speculation is that's a pretty big number, no doubt, on that one. So he's had all of those sales as well. But as far as his philosophy, I think the thing that surprised me most, and he told me about this 20 years ago, is that a lot of his business thinking came from his love of the band, the Grateful Dead. And I'm not even kidding. That was part of the headline in 2005. I said, this can't possibly be right. I'm a big music fan, too. Grew up listening to 60s, 70s music. And to me, the Grateful Dead loved the music, but they were like, it's kind of like a bunch of hippies, right? They know about business. And it turns out they knew a lot about business.
No question.
So Andrew loved them. Not only did he love them, you ended up working with them in one of his very first enterprises as a businessman, Market Vision, which I understand was like live event production. You had a television show.
Television programming and live events.
Right.
With very established brands.
Right.
Which is how I found the internet.
Yeah.
I mean, through these brands who were very early, the
Right.
NFL teams and the Grateful Dead. The Grateful Dead was selling products on the intranet before there was an public internet.
Yeah, so you had them, you had the Allman Brothers, you had a crazy list of artists. So let's go back to that and explain to people what it was about the Grateful Dead that plays into making Andrew Miller who he is right now.
Before I do that, I just want everyone to give a thank you to Ron. I mean, Ron it's an honor to be up here with him.
Thank you.
If there, I know Drew and Jen, who are following with Ron today, feel the same way. I mean, there's a Mount Rushmore of this industry. Ron's on it.
Oh,
truly. And he's been doing this from day one. And so I feel
thank you.
privileged to be sitting here with you.
I appreciate that.
So you guys have all heard of a company called HubSpot.
I heard that name, yeah.
Yeah, I think the last $32 billion market cap, $600 stock. Dharmesh Shah, the founder and chairman of HubSpot, bought chat.com from us for $15.5 million, which he decided to slip out by mistake on a podcast a month ago and allowed for this price to be out there because it was not supposed to be. But the co-founder of HubSpot is a guy named Brian Halligan. And I met Brian in 2005 because I was invited I got a phone call from the Grateful Dead organization saying, hey, we have this event in Boston where I live, and we don't have enough people to go, but this guy is writing a book on the marketing lessons of the Grateful Dead. Would you go? And I'm like, sure, I can go to anything Grateful Dead. So I show up in my own city in this a little apartment with like 8 people, 12 people there, and the guy's author is Brian Halligan, and Dharmesh Shah, his friend, was there. And they're like, oh yeah, we started this company called HubSpot out of this apartment, 6 of us. And this was way at the beginning. And he's like, I wrote this book because everything we're doing at HubSpot is built around the marketing lessons of the Grateful Dead. And that's why I wrote a book, which is on Amazon, called The Marketing Lessons of the Grateful Dead. And this resonates with me because it's my philosophy. So, as we tell this story, HubSpot and its $32 billion value 18, 17 years later, was built on this same philosophy, which is pretty crazy. And Brian, wrote that book in the beginning, and now that book carries a lot more meaning.
Yeah.
So that just, people don't realize that, and I kind of sometimes post about buying this book because it's an amazing book. So I don't want to spend tons of times on the Grateful Dead, but some of you guys, Mark Daniel, will understand this. Yeah. But there were some things that the Grateful Dead did in their history at the beginning that people thought were crazy that became to be extremely innovative in the business sense. So one of them was, collaboration, right? They were all about, hey, we're not gonna, so much of the music industry was secretive and possessive. And they're like, we're not going to do that. We're going to let fans come in with microphones and tape our shows, and they can sell the music, and they can leave with the music. And it was so collaborative. And that was one example where they shared their songs openly. And I think there's a famous Grateful Dead quote from a famous song of theirs called that's once in a while you get shown the light in the strangest of places if you look at it right. And I think domains are very similar to that. I often say, and I know my peers would agree with me, you almost never sell a domain name to who you think should buy it. Just because let's say I get a call from someone who has a great domain name and they're like, I think so-and-so is going to buy it. And I'm like, they're probably not going to. The odds are pretty good that who you and I think should buy it ultimately won't. And you cannot assume the company X is going to obviously buy a domain name just because I think they should. And I think that so much of that comes down to that same kind of opening your mind like the Grateful Dead and collaborating and experimenting. No Grateful Dead show was the same. Mm-hmm. I just got back from the Sphere, right? And 2 shows for Dead and Company, and they were 2 complete different nights. Everything they did, their wall of sound, they reinvented how you the audio for concerts, and they pushed the boundaries of everything they did. And I think it's the same with domain names. If you kind of experiment and think about who else might this apply to, who else might want this, who else might this make sense for than the obvious, you're going to more likely get your results and find your answer. And I think that's one. I think the other thing the Grateful Dead was huge about, which is do what you love, right? Like, you got to do what you love. And they loved playing music. And when they stopped loving playing music, they take a break. And when they loved it again, they came back. And it's like anything, domain names are an amazing asset because, as we all know, because there's no other asset out there or other asset class that provides the return on investment that these do. They have their challenges. They're illiquid. They're hard to sell. You have to be patient. But when you have a win, somebody was telling me this morning about a domain they bought, for $6,000. They just sold today for $100,000. Like you can't buy a house for $6,000 and sell it for $100,000.
Right.
Or you can't buy a house for $6 million and sell it for, $180 million. Right? It doesn't work. So, so much of that plays into this kind of open-mindedness, experimentation, collaboration. Because while the Grateful Dead were breaking all these frontiers, domains have always been breaking frontiers, always.
Right. I can remember when I started out talking about that return on investment and how incredible it can be. Info had just come out, the first new TLDs at the time. I didn't register many of those, but one I picked up a 2-word one, jobsonline.info. And I think I paid $10 for it. And a few months later, through, I can't remember which sales platform it was, I got an email that said it had sold, it was whatever I asked, it was like $12,500, and I'd spent 10 on it. And the money didn't come through right away. I said, I knew that was fake. And 2 or 3 weeks passed, and then one day I got the email, the money's arrived. I had to wire it or something. And so, I haven't had a ton of those, most people haven't, but I think everyone who's been in it 20 years have had on some scale or another, done that. And to me, that's a great appeal. It's that the barrier to entry in this business is so low. You could start with $100. Remember Merlin Kaufman, a lot of people know his story. He's a teenager when I met him, and Merlin parlayed that into a fantastic .com portfolio. He would actually call people who he saw their names were expiring and say, I see, and he has such a great personality, he would call and say, I see you're going to let that go. If you're not going to use it, would you mind transferring it to me, man? And he would get some names that way. That's not so easy to do that anymore.
No more.
But getting
Those
back
days
on,
are long gone.
Right. But getting back on track, I think the collaboration point
and
is
then look, Mike Mann did it with drops, right?
Yeah.
He did the same thing. He just spent his...
And Frank Schilling even, too.
Yeah.
He was stories, he closeted himself in his basement and said his hair had grown halfway down his shoulders because he just obsessively in there getting drops. And so that was a big deal, too.
I think the word obsessive is key, right? Mike, I know Mike didn't leave his house for 3 years,
right?
Up at all hours of the night waiting for the drops, and Frank didn't cut his hair, and no matter what you do, right? It requires you have to love it to be willing to do that,
right? But you also have to collaborate and love your people and audience around you. I thought it was such an important point because I remember in those days, all the major artists, because technology had come along where people could go into a concert and record it, they were doing expending so much energy and time stamping out the bootlegs. But I had record stores back in those days, and you could walk in any independent record store and there were bootlegs everywhere.
Sure.
And they weren't policed very well. So the Dead just flipped
On
that on their,
cassettes.
yeah. The Dead just flipped that on its head. They said, we don't care, go fans record it. And I think that's one thing I would say about them, of all the great bands that came along, the loyalty factor that they have was like off the charts.
No question.
Their fans were nuts. And why? Because they were that generous with the music.
Which is why they're about to generate $250 million of revenue from a residency at the Sphere for 3 months of selling out every 4 nights a week.
Right. I remember in this business
Even years later.
Yeah, it's insane. In this business, you'll recall, probably you might have heard Monty say it, Monty Khan back in 2005, his thing was always co-opetition, that you compete, but that we can all move further if we find ways also to cooperate. And that has kind of resonated with me, that, where there's a big enough pie for everyone, and there are ways to help each other and further and bring the entire industry up, newcomers, people who have been around, and I think that's why we've gotten to the point where we're at today.
And I agree. And I think that, when I first started out of college, I worked on Wall Street, which we'll talk about a little bit, because that's the other kind of where my philosophy came from. But the reason I took that job was because I was talking to a friend who was a very successful Wall Street stockbroker, one of the best, and family friend. And he was like, what is this going to be? Like, I had no idea what I wanted to do. I had no idea. But this was the opportunity that knocked at the time. And he said the best thing about Wall Street or the stock market is every day is a new day.
Yeah.
Like, you may have a stock that's done nothing, and then you come in the next morning and the company's been bought out and the stock's up 30 points or down, or
Right.
And it's interesting because you just said with domains in your email example you gave about the online job.
Right. Jobs online.
Job, yeah. We all have had this, I'm sure a lot of us have, there's nothing better than you wake up on a day and you open up your inbox and someone wants to pay $3.5 million for your domain, or whatever the price is, whatever tier you're playing in. And that, you just wake up and that happens. That happens because you got lucky. That happens because you bought a smart domain. That happens because you worked your butt off to get that email to come eventually. But every day you wake up and every day is that opportunity. Every day is a new day.
Right.
Every day brings that promise.
Right. Well, the Grateful Dead philosophy that you brought out, to do what you love, that's always been the philosophy of my entire life. And I've had 3 separate careers, and every one was based on doing something I loved. Regardless, money was not a consideration. And for me, I don't know what, I know some from you because I know your life story. For me, my dad was a blue-collar worker, brilliant guy, but he didn't have much formal education. So when I was young, he would come home from work, and he had all these great ideas, even for businesses and things, but he had a family to take care of, and he would say that, I can't wait till I retire, and this is when he's probably in his late 30s, so I can do what I want to do. And it kind of disturbed me because here's this guy, he's got great ideas, he's smart as a whip, and he can't do what he wants to do because, in this case, he had a family, and
Sure.
he put that first, and all of us would put that first.
No question.
But I had the opportunity starting from there. Well, I don't know what I'm going to do, but whatever I do, I'm just going to love it. And I fell into broadcasting early on because I love music. So I became a radio DJ. After a couple of years of that, I found television. You could do better there. Moved to television, did that 20 years. And then I loved music. After I left TV, I went back to music and opened a chain of record stores. But all of this, and those record stores eventually closed. The internet wiped us all out. But every day, even when it was up, when I was failing with the music stores, I was going to work every day. Man, I loved going to play music for people. Yeah. And I got the domains, and really, that was the best thing of all time to me. And it's an illustration of when one door closes, another one opens. When all the stores had to be closed, you look at that and go, man, that's it's just like I get wiped out. Now what am I going to do?
But you found them.
Then I start looking around. The only thing left of that enterprise of any value was the domain name, which was musicparadise.com, which is what I did worldwide mail order from that. So I said, whatever I do, it's got to be the internet. I stumble into domains and I go, these guys can own the right to a word on the internet. Think of the power that has. And I just was all in immediately. I said, what could be better than that? Every day you get up and you're searching for other words that have value to them. And your whole life kind of expands because the more you know about more things, the better you're going to be as a domainer. If you have interests and knowledge in various fields, even my thing's always been know a little bit about a lot of things, not that much in depth in very many things, but it's enough that you know this would be a good thing, this would be a good thing.
I agree with that.
So now you converted me in the course of the interviews we've done. Now I see your analogy completely on that.
And I don't want to go into what we're going to do with Drew and Larry because that's going to be
Right.
very different than Drew and this talk, than Drew and Ron's talk. But with Hilco, we handle, not me as much, but one of our businesses is the leading disposition company for bankrupt and distressed assets. And what you almost always see is at the end of one of these distressed companies, the domain name is by far the most valuable thing left standing.
That's right. Well, let's go ahead and talk now about Wall Street. When you got out of Cornell University, you still weren't quite sure what you're going to do. You mentioned that someone gave you a tip. Well, a lot going on Wall Street. You wound up being in a situation where you could learn from Michael Milken, who was a billionaire financier in the 1980s. He had a sad ending later, years down the line.
Well, it wasn't an ending. It was actually a beginning.
Okay. Well, you can clarify
Yeah.
that because you know the story much better than I do. But the point that I was going to make is that he was a genius in raising money and getting deals done.
Yes.
And that's about as much as I know from what you had told me, but you learned a lot of the art of deal making from your years with Michael Milken. So tell us all about that.
So I don't want to spend a ton of time on the background and more about the lessons, but
Yeah.
Mike, I was accepted into his training program for 18 months at Drexel Burnham. I met him for 50 seconds.
Oh, wow.
Third day, he spoke to us for 5 minutes, and that was the last time I ever saw him. I became friends with him many years later. I spoke at his conference, and I traveled on his plane to baseball stadiums for prostate cancer, which I won in an auction. And when you're on a plane with him and a handful of other people for 4-6 nights or days around the clock and going to baseball stadiums for charity, before Wi-Fi was on these private jets, there was a chance to really get to know somebody. So I didn't really get to know him till later. But one of the things that at his, Mike Drexel went down, and Mike went to jail for a while for being completely thrown under the bus, quite frankly. But he really reinvented the entire financial industry, and he's now a multi-billionaire and one of the most philanthropic people in the world.
I saw his worth today. It was like today, $7 billion. And he's a major philanthropist too.
Major. I mean, everything he does is about education and philanthropy. Yep. But Mike did not believe in competition, and he embraced collaboration, much like the Grateful Dead. He used to always say, and this was more years later when I was with him, not when I was working there, but he goes, there are infinite deals, right? He would always say this, there are infinite deals, and he goes, I couldn't have done what I did without the other investment banks, right? If I'm raising $14 billion to buy Snapple or $3 billion, I can't do it without my competitors or my partners. And he did so many deals, and he always used, the thing he said to us in our training program in the 2 minutes he did speak to us is, and I'll never forget it, have other people help you write your tickets. 50% of something is worth a hell of a lot more than 100% of zero.
Yep.
And it's a philosophy that's stuck with me in that industry and in everything I've ever done since. And so many of us buy and sell domains together, whether as investors, brokers, advisors. There's a buy side, a sell side. Or Larry and I have obviously collaborated on home.com, which was 15 million plus, and last said I could say it, and chat.com, right? And we obviously shared in the upside of that instead of keeping 100% of it. But without Larry, there wouldn't, or without me for Larry, there wouldn't have been a deal. So I'm a huge believer in what I learned from Michael. And what I always say about domain names is, at least I play in the obviously the oneword.com world, but there's 400, and I believe this is an accurate number, 477,000 words in the Webster's dictionary. Okay, and some recycle, and then some when you start combining words, two words, right? That number multiplies. So there's enough words, enough domains.
Right.
Sure, might I lose a domain to somebody or get one from someone else, but at the end of the day, whether it's an investor or an advisor, but at the end of the day, there are so many words and so many domains. And, I'm about to buy one right now that I will talk about next week, hopefully when it's closed, but that's a recycle, a deal we brokered 2 years ago, and now we're buying it. Wow. So these things, and I'm representing beer.com for my friend Damar right now. That was my first domain that I sold, as Ron said, in '98.
Yeah.
So there's plenty out there. And there's an amazing group of people in this industry to collaborate with and who can help you get deals done. Maybe, I don't know somebody and Drew does, or Jen does, or Larry does, and I'd rather make 50% of my money. From a financial standpoint, I'd rather make 50% of that than struggle for zero.
Right.
So that was a big Mike Milken thing. He goes, I never could have got there otherwise.
Right.
And, number one takeaway for me on that.
Great. Now, we're talking about values. This is another thing I wanted to talk with you about, because people are so fascinated with the price tags when they come out on these high-end domains, because it's not just in our industry, but those are the things mainstream media picks up. You'll see them in the New York Times watching this domain sold for this or that. But I know the reporting of domain sales has always been kind of a point of frustration, not just for you, but pretty much for every high-end domain broker, because it's a double-edged sword. We all want to know as much as possible, and a lot of it, I'll go back to what DN Journal does. In 2003, we started collecting as many publicly reported sales as we could. But my reason for that was to have an educational tool. I knew from the start that we were never going to get more than a tiny percentage of all the sales that happened, particularly the higher end sales, which are almost always under NDA. But what I wanted to do was get as many examples as possible of a specific name with the exact cash price, and so that people could look at these and get a better sense of, okay, this name is going for this and this name for that. Now, that's two things. It gives you a little bit more understanding of valuation, because it's a very difficult thing to grasp when you're coming in, what makes one more than what's another. But for you're doing these deals up here, and you're seeing the highest reported sale is down here. So understandably, you're thinking that doesn't really reflect on how valuable these assets can be. So from your standpoint, interested in the viewpoint, because some of your highest ones did come out, not from you, because you're a very big believer in confidentiality. But you can take a guy like George Kirikos, who's a financial analyst. He'll just wait for company quarterly SEC reports to come out, and he'll find the price of a domain asset that was sold in there. So some of yours have come out like that over the years. So give us just your thoughts on valuations and that tension between private and publicly reported sales.
This sounds hypocritical, obviously, in the light of the last month, with the two deals coming out. But I am a huge lifelong believer in protecting pricing, whether you're investing, buying, selling, in NDAs, in confidentiality around transaction and price. And the reason for that is because, first of all, I think it's bullshit that you need reported sales to show others what the value of a domain is, and we can talk a little more about that. But if you're good at this, then you don't need to point to those other sales. You can overcome that. It's actually, I think, the opposite effect most of the time. 90% of mergers and acquisition transactions, right, companies being acquired, are under, you see the undisclosed price in the press release. Right, private equity, almost every private equity deal. Only when it's two public companies or a big public company buying a private company do you see it reported. And that doesn't change the valuations the private equity guys are getting when they're buying or selling domains. So companies. So here's the problem, right? If you report it, it anchors or it boxes in the value of a domain. I actually wrote notes about this, because what makes domains so different and so awesome is exactly the fact that there are no pricing, right, parameters. It is still the wild, wild west, as we've been saying forever. It's really the buyer's imagination, right? The imagination of the buyer of what is the value to them if they push it to the limit, or it is the catalyst for their company or the catalyst for their dream. Think about this, right? You have a buyer like Darmish buying chat.com, and for whatever reason, he thinks he can take this domain name, in this case he resold it to a company he was an investor in, so he believed it would be a catalyst for them. But there is no price. It's what makes domains so unique to any other asset. The lack of any comparables allows record deals to get done. It's really what will the market bear, right? If you're willing to hold out and there's a buyer who has a dream, who has the money, Maybe they pay 15, maybe they pay 17, maybe they pay 3. But with that said, with my 2 deals that have come out, Gold.com at $8.5 million because George found it, which is what George does. And it's funny because I asked my buyer, A-Mark Precious Metals, are you going to have to report this in a 10Q filing? And they didn't think so. But then they ultimately did. To deem it was material enough to report, and it came out. And then Chat.com came out because Dharmesh was on a podcast and he slipped, he got caught, he got asked a trap question about a podcaster, and he actually came out and clarified what he paid for.
You can't trust media people.
Yeah. And, even with, even those deals, right? I mean, I think gold sits atop the 2024.
Yeah.
And Chat atop the 23 and two at a top 10 all time.
Right.
Even those deals anchor in they're great to have that to point to. It's great to point to those numbers.
Yeah.
I'm not going to say it's not, and I'm not going to say it hasn't been helpful for us, but it still anchors you. I was in a conversation in March. So we sold a domain at Hilco in March that we can't talk about till September when the domain transfers. 2 large public companies, massive deal. Is bigger than these.
Wow.
And one of the buyer was like, hey, why should I pay more than that Chat.com deal, right? They anchored themselves around that publicly reported number. And if you see, we did a 3-letter deal a few weeks ago, a 7-figure deal. And I saw today, CETO reported a $100,000 3-letter deal. Well, now I'm battling my 7-figure buyer to say, well, I see the top 6 of the top sales of the year on DN Journal. I love what Ron does, but I've always had a back and forth with him about this because how many times, if you're in this business, do you have to answer to that? Well, I don't want, this would be epic. This will be one of the largest domain sales of all time or of the year if I buy this. Why should I pay that? And the answer is, well, it's not. And you have to now tell them and reverse engineer this, that's just a small sampling list and you have to explain it. So it does cut both ways. Right. And what I think I've always accepted is just like merger, I compare this to the private equity merger and acquisition world, that undisclosed prices are healthy and they're good. And if you understand that a domain name is usually bought for at a large price by someone who really wants it and really knows why they want it and understands its value to them, then there is always a price zone. They're not going to pay, even an Amazon or Microsoft or Google has got a ceiling where they say, you know what, enough's enough. You're not going to take advantage of me. But you get anchored by these reported sales, even our own, right? And I was anchored by my own Chat.com deal in March and how to overcome that.
Yeah.
Because people will latch on to whatever they can latch on to, right, to get a better deal at the end of the day. So I think that's, these coming out do establish, possibilities for the dreamer. But again, anchoring is never good. This isn't your house, right, where there's a square footage. There's 3 or 4, 5 bedrooms. There's 2 bathrooms or 3 bathrooms or 3.5 bathrooms. And the house are 3 doors down sold for this. And the house 2 doors down sold for that. This is still what the market bears. And that's what makes it so amazing.
Yeah, and your point on comparables is totally accurate because the beauty of domains is that they are truly unique asset. There is only one home.com. There is only one chat.com. So it's a market of one thing, and it's almost like a piece of artwork. And so you could see a piece of artwork go for $5 million at Christie's to one buyer, or if the right person's in the room, could go for 50. Sometimes you see this all the time in public auctions.
Even art is anchored by the artist.
Yeah, well, yeah.
To some degree, right? So unlike a domain. So, a Van Gogh is a Van Gogh, Rauschenberg. There are parameters around what a Van Gogh goes for out there based on what the market pays for it. Yeah. And they're, very high end, obviously, and they're very rare, but they're still anchored by that value of that artist, whereas a domain really is anchored by what the dream or the vision or the perceived value is for the buyer.
Right.
How much they want it, how badly they need it.
That's one reason that I've never been a big fan of appraisals. People have tried to do them, but because of that very reason, it's hard to appraise something because, as you said, who is the buyer? How deep are their pockets? How badly do they need it? There's all these variables you don't know about the seller. Do they need money right now? Because they may sell it for, if they need money a month from now, they may sell it for half what they want that day. So Again, those are numbers that are fun to look at sometimes, but personally, I've never put a great deal of stock on. People try to do it, but I just don't see how you can do it very accurately.
And I get asked, Hilco, look, we have a company, Hilco Valuation Services, that is, 100-person, multi-million-dollar valuation company. And so I've been asked to do appraisals, and I know Drew does appraisals. Mike Mann has an appraisal system that he's, trying to use, and he does by hand with people. But I agree with you. To me, I try to stay away from that because I don't know what the value. I mean, you have to. I view it as I need to overcome why there is no appraisal with someone I'm trying to do a deal with versus try to appraise it and anchor it and put it into a box.
Yeah.
There's still always a zone of where, I call it the ZOPA, right? Zone of possible agreement. I write about this all the time, right? Where a deal can get done between this and that, but you don't want to anchor yourself, right? And, to some degree it's what are you willing to take? What's a buyer willing to pay? What's your liquidity needs? But at the end of the day, the big deals get done, in my opinion, in this space because it's mysterious.
Yeah.
And similarly, Ron, right? I mean, total, you see total domain sales, right? I mean, the market as a whole, the volume of how many of these assets trade. And obviously GoDaddy is the biggest player in that, probably in that space. And they do, I think, in their public filings, they report domain sales, and, some of the escrow services report their volume of transactions. And, I'm on the board and a shareholder at Atom, right? Atom reports it. I mean, everyone tries to kind of put a number on total sales of domain names as a market value, and even that to me gets tricky because these undisclosed deals, right? I mean, we've done, it's been a positive sign, I hope, for the market. It's June 6th? June 6th, and we've done almost, we're pushing $50 million of domain sales in this calendar year.
And which were the highest priced domains and their names in that group? I tried to do that podcast.
You're an old media guy, Ron.
I tried to do that podcaster
Chat.com.
crap. It didn't work. I knew it. I didn't think it was worth a try.
But my point being, none of those are at places that will ever report it.
Yeah.
None of those transactions were done. The biggest one was honestly done, believe it or not, without escrow. Buyer, two massive, large public companies, the buyer and the seller trust each other contractually, and the payments are being done direct. So I think it's reported sales, industry volume. You have to be careful about how that hurts us as we try to grow this industry and make it more mainstream. And when Larry and Drew and I talked today, to make this different, because Drew has another chat with Ron that will be awesome at 2:40, I think, that I will certainly be at. We're trying to keep that next session about, different from these.
Drew and I are going to be, we're way different. They definitely don't want to miss it. Yeah.
But I think, one of the things there is, how do we get the constant question, how do you get CEOs and founders out there in the world, investors, VCs, private equity, family offices, how do you get them to truly understand how important domain names are? Mm-hmm. And that has always been the holy grail challenge, and it's getting better.
Yeah.
But it's so far from where it should be.
And one last point on the valuations, and I don't think I've ever brought this up with people, but just to show you how piecemeal it is that the information comes from and why it is such a small section of it. What we obviously get some private buyers and sellers, and I'll have them send me documentation from the financial service that the money changed hands, because I won't do payment deals, the money has to have been paid. But you have a handful of platforms. Cedo does a regular list of theirs. Snap Names and NameJet does a regular list. GoDaddy used to put out only a top 20 list, and now they don't do that because they've tried to keep all that data in-house to use for their own appraisal system. Escrow, you mentioned, does total dollar volume. My friend Jeff Gabriel, when he was at Uniregistry, used to give me a block. There were times he actually would send me a big list, a massive list of sales, but mostly give me a big block number the days that he was at uni. So it's like just a weird mixture of odds and ends, basically, to get this tool of the charts that you can learn from. But it is such an infinitesimal part of everything that we're seeing.
And look, we all like to pat ourselves on the back. I'm not going to sit here and say I don't love that the chat number came out and that was our deal. I mean, come on. We have egos. We have reputations, and it helps. But I don't understand that it's head shaking to me. Some of the companies you just mentioned, their desire and their they're going out of their way to report what I think are shitty sales, like crappy numbers for a domain that only hurt all of us. Like, why are you doing that? Like, you sold the 3-letter domain for $100,000. Like, who do you think that's helping?
Yeah. So
Right?
what do you
it
think?
It should have been a 500,000 or a million or 700,000. So I think it's really, and look, I've said this to Ron, who as everyone knows, I love. Even with his list, at times it's really been hard for me to battle that, right?
Yeah.
Even now, sitting where we sit in it.
Yeah. What do you think would be better ways that could be conveyed? Or are there better ways because again, you have to walk them through what we just walked through.
I think that if more people realize that it hurt versus helped and embrace the fact that undisclosed is not a bad word, okay? Again, look at private equity is a great example. No one makes more money than the PE guys.
Yeah.
Nobody. And 90% of their deals are not disclosed. They bought for an undisclosed. They sold for an undisclosed. Some of those leak out. They've made their money. They probably don't care. And there are different metrics around private equity deals, right? Because those are based on multiples within industries, but like certain parameters, much more than domains. But, if you don't, I just feel like no matter what the number is, it's causing an anchoring. And because it's no matter how many things you announce or report, it's still a small piece, a minor piece of the overall puzzle. And our industry is not going to change because big companies, VCs, buyers are not going to want, it was, as Ron knows, right? I said this to him. I mean, chat came out because Dharmesh slipped up. Gold came out because George did his job, and that does happen. Happened to be two of ours in like random 30-day period. I don't think I had a disclosed deal for 15 years before that. And I like it that way.
Yeah.
Because it helps me do bigger deals.
Yep. I see our time's winding down a little bit, so I want to move to a couple points. You mentioned being obsessive about domains, which I think almost all of us are really, and that you can get very good at it that way. But I know there are some other things in your life that you're just as obsessive about as the Grateful Dead and domains. You're a big sports bettor. We're both big sports fans.
We are.
We both like Tom Brady now. When he was with the Patriots, I didn't care for him. But when we got him in Tampa, I said, that guy, I love that guy.
He's done us both well.
I love that guy, yeah.
Next Wednesday, I'll be going to his celebration in Gillette Stadium.
No
his
kidding.
Retirement ceremony, allegedly.
And then I have to ask you about, when I grew up, my hero was Mickey Mantle from the Yankees. And there was an argument in those days, growing up, who was better, Mickey or Willie Mays or Ted Williams? And I already know what you're going to say, Ted Williams, because you're from, and I met both Mickey and Ted and interviewed both of them a number of times. And
It's the first time I haven't felt old.
Yeah, no, really.
I didn't see any of those guys.
Say, what is this? Is this like back in the 1890s when? Those are heroes. And see, but you have to say Ted Williams. I say Mickey, right?
I will. Of course, it was Ted Williams, but and of course, it was Tom Brady. I will say there is one amazing parallel between domains and sports betting and daily fantasy, which I'm addicted.
That's the obsession.
Yeah, which I'm obsessed with.
Right.
And the daily fantasy community lives on X, on Twitter. It's an amazing group of people. And if you've been to a daily fantasy live event, like I've been to a couple DraftKings live finals where you have to, you're competing for $2 million first place prize with 200 people in a room for a day. You look and you wonder who these people are. You look around and there's 200 people in that room competing for this who play daily fantasy addictively or religiously or professionally, and they're amazing people from amazing backgrounds, and they're there with their families and their wives and their business partners, and they live in social media, and they're an amazingly small, tight-knit community of early adapters. And so are domains, right? Mm-hmm. It's the exact same thing. Everyone in this space is similarly diverse and entrepreneur. I think I wrote it: entrepreneurs, billionaires,
creative
early
people.
adapters, hackers, tech programmers, insane people. But we run the gamut. But it's an amazing tight-knit community, living in social media groups and Discord groups, and connected through the means that we run our business and the internet operates, which is things like that. And the daily fantasy is almost the exact same thing. Earlier, right? Domains have been around since, let's say, whatever, early 90s. Actually, we're representing a domain right now, which is like amazing, id.com.
Wow.
That the guy who owns it hand registered it in 1991. I'm sitting here saying like, I was late to the game in 96, very late compared to some of the people we all work with or some people here, I'm sure. But 91, that was a first for me. Like I had never heard of 91.
Yeah.
And, but we've been around since the mid 90s. Daily fantasy's been legal, since call it 2013, I think. And sports betting really since 2020 is a kind of becoming more mainstream. So we're in the earliest of innings of that industry as well and how that's evolving. And it's, not dissimilar in the respect that and by the way, it's an amazing industry to buy domains.
Yeah.
Right? I mean, what's happened, we sold football.com to an offshore sports betting company a couple years ago, right? I mean, the sports betting industry is an amazing place to eventually be demand market for domain names.
Yeah. Are we about out of time here? I wish we weren't, Andrew, because, man, we have so much fun when we
We'll
get together and
continue
talk.
it
And I had
offline
some,
over the
I had
years.
some more. This whole book is all questions, man. But we'll do it again.
Appreciate it.
All right. Great to go. Thank you so much.
We're going to stay for your next section.